Hi, I'm Kris Chand from Sharon Partners Financial Advisors. Today, I'm joined by Dr. Steve Garth, an independent member of our investment committee, to discuss what's happening in the conflict in Ukraine. Hi, Steve. What do you make of what's going on?
Hiya, Chris. Yeah, well, look, any geopolitical conflict is bad. And of course, we feel for all the people involved in it. I think, Chris, what we want to focus on here is not the geopolitics, but, the impact on financial markets.
And in terms of financial markets, I've often heard of Ukraine referred to as the breadbasket of the world. I assume that means this conflict could have some serious significance.
Yeah, exactly. Ukraine is the second largest country in Europe, but more importantly, it's the largest European country with arable land, in other words, good land for growing crops. On top of that, they're, I think, the second largest iron ore exporter and fourth largest in the world in terms of natural resources. So you can certainly see that Ukraine is an important country, but also food and energy are going to be affected by this conflict.
Well, definitely, Steve. I've certainly noticed a little bit more pain whenever I go fill up my car at the petrol pump.
If you look at energy prices, they were already increasing as we were coming out of the global pandemic. So they will also get higher. Any interruption to the flow of, grains and wheat out of the Black Sea is going to have an effect on food prices. So there are two things going on here. We're going to see an increase in inflation because of the increase in food and energy prices, but also, of course, the conflict may lead to a slowdown in global GDP growth. So those two conflicting things, higher inflation but lower GDP growth, will probably have an impact on the path of interest rate rises that central banks have laid out.
So, Steve, inflation is a word that always seems to be associated with a bit of turbulence in financial markets. What do you see for the markets going forward?
Yeah, Chris. Well, first of all, if we just go back a little bit and have a look at how markets have performed, at least over the last 12 months, and you actually see that it was a phenomenal return in 2021. Developed markets up 25, 26% for an Australian investor, and the ASX 200 was up 17%. But ever since the start of the year, the markets have been coming off. And as you correctly say, that's due to the inflation and the expectation of higher interest rates.
And what about bond markets? How do you think that'll be affected?
Yeah, so bond markets are probably a good way to get a handle on what we might see in the future. Typically when there's a geopolitical conflict, there's a flight to safety, and that means investors rush into the safer bonds, pushing bond yields down, pushing bond prices up. But at the same time, inflation works the other way. Inflation has an effect of where yields want to go up because they're pricing in future higher interest rates. And when yields go up, prices go down. So the bond market is grappling with these two opposing forces. And you can see in the chart here that the US yields have come off a little bit in the last week or so. At the moment, there's not too much we can say about how the future will look. Except the bond market still has yields just under 2% in the US and just over 2% in Australia. So the market's not looking at yields falling back down to under 1%, or in fact, yields going up to 6 or 7%. So at the moment, the bond market seems to be looking through the conflict and saying that, look, we expect interest rates to be on much the same path that the central banks had laid out earlier.
And finally, Steve, I suppose this global uncertainty does create some worry for investors. What do you think are some key takeaways that they should keep in mind during times like these?
Yeah, look, it is always unsettling for investors when these conflicts come up. And I think investors need to keep in mind that, geopolitical conflicts do happen from time to time. They tend to be short-lived in the market. If you think about long-term investing, you look at this chart over the last 30 years, it's actually seen through a lot of conflicts and disasters and different economic cycles. And in the end, you've been rewarded as a disciplined and diversified investor in global markets. So whenever we see conflicts like this and people ask, what should I do with my portfolio? The answer is always do nothing. You're in a portfolio that's been set for you to meet your specific risk tolerance.
Definitely, Steve. Staying focused and focusing on the long term is fundamental to our investing philosophy here at Sharon. I think that about wraps us up. So thank you very much for joining us. Really appreciate your time.
Terrific. Thanks, Kris.